Want to invest in real estate? Looking for the best way to invest in real estate? Not sure if it's better to buy physical properties or real estate stocks? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Real estate is fantastic for investors for all kinds of reasons. Physical property is necessary for everyday life. Be it for housing, shopping, manufacturing, or storage, real estate provides a ton of utility and value to society. And while you can accomplish a lot online these days, you can't put a digital roof over your head. Plus, as the old saying goes, they're not making any more land. There's only so much possible real estate to go around, limiting supply. And as more people are being born every single day, driving up demand, the law of supply and demand dictates that real estate should do very well over the long run, as it's already been doing. But how do you invest in real estate? Should you go out and buy physical properties, or should you buy REITs? Let's break it down. I'll be comparing privately held real estate to REITs. A REIT is a real estate investment trust that can be bought and sold like a normal stock. A REIT is typically a company that goes out and buys real estate for purposes of profit. They essentially do the hard work for you and then send you dividends while you hold the stock. Physical real estate is just as it sounds. It's property you go out and buy and manage yourself. Let's first look at returns. On this count, it looks like a win for REITs. Per the National Council of Real Estate Investment Fiduciaries, the 25-year unleveraged composite annualized total return for private commercial real estate properties held for investment purposes only, referred to as NPI, came in at 7.7% as of the first quarter of 2020. REITs had an annualized total return over the same 25-year period of 9.9%. So if we're talking about total return, it does appear that REITs are the better investment. But I'll tell you the truth. Even if REITs provided for inferior returns, I'd still personally advocate for them. They're simply an easier and lower risk way to play real estate. The fact that you might actually end up outperforming private real estate investors is just icing on an already delicious cake. That's because of my second point, which is the barriers to entry. When you invest in real estate through REITs, you log into your brokerage account and buy stock. It takes seconds. No barriers to entry. Then you sit back, go about your life, and collect growing dividends. A REIT takes everything great about real estate, taking advantage of the innate need for property, and gets rid of everything bad about real estate, all of the effort and headaches associated with buying and managing properties. Physical real estate, on the other hand, has massive barriers to entry for the everyday person. It's just much more difficult from start to finish to acquire a physical property versus a REIT. Then there's leverage. You don't need to take on leverage with REITs in the same way you almost always do with physical properties. While REITs themselves might be levered, you are not, and that makes a difference from a personal finance standpoint in terms of liability and risk. Unless you're sitting on six figures in cash, physical property will require you to go out and leverage yourself. Let's also talk about scale. A REIT gives you instant diversification and scale. Many high-quality REITs own hundreds or thousands of properties, so when you buy stock, you're instantly spreading your capital and risk across all of those properties. But when you're building up your little empire of physical properties, you're taking on a ton of risk upfront by virtue of the lack of scale and diversification. Starting out with one property means you're rolling the dice on that one location only. So if something happens to the tenant that's renting that property, you're absorbing the cost of that vacancy. And that could be lights out for you if it drags on long enough. Some landlords are finding out that the hard way right now with the pandemic ramifications. How about fees? Another easy win for REITs. REITs have basically no friction costs. Most US-based brokerages are now charging nothing to buy stock. So you can buy real estate via a REIT and pay $0 to do so. This isn't even comparable to physical real estate, which will almost always require massive fees both for buying and selling. When you buy physical real estate, you have to actually scout properties, secure financing, take on the leverage, and then manage a property. And you're also paying a ton of fees. All of that hard work. Oh, if you don't want to manage a property yourself, you have to pay additional fees for that too. Then there's liquidity. REITs are highly liquid. Need to raise cash? Sell a REIT in 1 second flat. For nothing or next to nothing. That's it. As liquid as it gets. But if you need to liquidate a physical property or two, that's a much more cumbersome and expensive process. Lastly, there's the matter of time. I value my time so much more than money. It's why I aimed for and achieved financial freedom in my early 30s. I don't like the idea of trading time for money unless there's something I really enjoy doing. A REIT doesn't bother me when a property needs a repair. I don't get a phone call in the middle of the night from Realty Income Corp because there's a proverbial leaky toilet at a property. By the way, make sure to check out the video we did on Realty Income not long ago. Now, if you like the idea of dealing with banks, tenants, vacancies, leverage, repairs, and everything else that comes with managing physical real estate, go for it. But I can think of about a million or so other things I'd rather do with my valuable, finite, and dwindling time. I'd rather collect my dividends as rent checks and go about my enjoyable life. Furthermore, you can take the time you save by owning REITs and apply that toward other endeavors in your life that could make a lot of money, which means you could be getting the real estate returns in the background while you're simultaneously doubling up and making money with something else. In my view, the answer is quite straightforward. A REIT is a simpler, cheaper, and lower risk way to invest in real estate. It's superior across the board. The fact that you will probably end up with the higher long-term total return makes it a no-brainer. Physical real estate is for managers. It's for people who want to be hands-on with their properties, but all of the friction, leverage, and upfront risk that comes with that can make it, in my opinion, an inferior way to invest in real estate. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments if you prefer buying REITs or buying physical properties direct. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, be sure to check the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is and am often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.